Good morning, everyone. Welcome to, well, whatever time of day it is you're watching us, but it's morning where I am. And we're recording this for all of you everyday traders out there. This is Greg Jensen from Options Animal. Glad to be with you today. I'm joined as always by my friend and partner, Eric Hale. How are you today, Eric?
Good. What do you think of the shirt? I've got this new special.
Dude, I love it.
Yeah, I have sometimes when I present, I have a green screen and I'm wearing a green shirt with avocados on it. And avocados because of the longshoreman and the impact that it's going to have on my favorite fruit. Or I guess yeah, avocados are technically a fruit, right? But
They are.
I'm
They
gonna change
grow.
that so I don't have the
There
green
you go. Thank you.
craziness going on
I was gonna say
anymore.
it's not. You missed National Avocado Day by about a month. I think that was like the end of July, right?
Yeah, I love avocados. They're my favorite. It's
They
guacamole.
are, and yeah, they are going to be impacted by one of the things, and not just avocados, right? We've got a potential situation developing with a strike ongoing in the dock workers in the East Coast, and I believe the entire Gulf Coast as well, if I'm not mistaken. And so it'll be interesting to see what that does to the economy. Obviously, it's going to impact in the short term some situations that could spike inflation. It's really one of those funny things. I know you and I have been talking about this potential risk of a double hump of inflation. And we brought in charts that we've shown before. And did you know in 1977 there was a 7 week long dock strikers work or a dock workers strike that helped re-spike the inflation? It was one of the things that really re-triggered the second wave of inflation. It's like we haven't found a new playbook.
Now that's the kind of trivia that you would expect to get from. Let me guess. Did that come from Bianco? Because that sounds like something he would
I
probably
don't
come.
remember where it was on Twitter, and it may have been Bianco that I read that on. Yeah, it's random trivia, but yes, there was a strike right after they had thought they had conquered the wave of inflation, and it created shortages and started spiraling. The Fed also was cutting rates at that time, thinking that they had won the battle versus inflation. And the interesting part, I've been reading more and more about this drop in inflation, and much of it, as we've been showing as we go through, if you go back and look at our past episodes of our CPI data, has really been driven by the drop in energy prices over the last year or so. And the fact that just recently we had oil under $70 a barrel. In fact, even with the tensions today, it's still only barely right at $70 a barrel,
Well, people
which
might
is
not be
very,
watching. They might be watching this at a later time. So today is
I guess that's true.
October 1st, 2024, and we all kind of tuned in the radios this morning to hear that Iran launched missiles into Israel, and Israel's retaliating. So we're seeing oil spiked, was up 4% or over 4%. It was at one point today. The market in general is down. The VIX is spiking up. And that in confluence with some other things, we got the dock workers went on strike yesterday, right? So it's last night, was it?
Yeah, it was just last night.
And
So I guess to finish my thought on that inflationary pressure is because energy prices can be really quickly moving based on a lot of times geopolitical risks, a lot of times seasonal demand or economic growth. If we really start to see demand for oil, particularly from growing economies like China, that resparks a demand for oil, we could see some of that inflationary pressure start to come back. And what that'll do to the Fed going forward in their decisions of how many more rates they're going to cut, I think is maybe one of the big challenges that this bullish market probably has in front of us. But to be honest, the bull has just kind of ignored all concerns this year and it just keeps climbing. There like it doesn't have any worries, or like I said, when it has a worry, it just keeps climbing that wall of worry with the massive amounts of liquidity that are still going after U.S. traded equities. So I guess maybe one of the things I wanted to kind of focus on today is I'm assuming that you have not changed your tone on being bullish through the end of the year.
I,
Um,
I haven't.
I have changed my tone because we got through September and didn't have a correction. I think the markets now are in that phase of the end of the year where I think there's a chance that the markets really have the ability to move bullishly. Um, and I guess the question is, if we're both bullish going into the end of the year, are any of these things we're talking about, could they potentially derail the bullish train? So whether it's the Middle East tensions that you had just brought up, whether it's potential of a resurgence in inflation, whether it's this dock worker strike, what are your thoughts on each one of those, and are they gonna change the bullish tone?
The answer to the question is to take a step back and ask if any of these represent a fundamental shift in the economy or how markets work. And the dock worker strike is, it will be over. I mean, it could last days, it could last months, and it will definitely have an impact. But that impact is bound to be just short lived and will definitely pass. I don't think there's any um, belief that it's a fundamental shift. Although, if anything, it's just reading the tone on Twitter. If you see I've seen some videos of the docks in China that are, a couple guys sitting behind a desk someplace, and everything's all automated and done by robots. Where we're a lot more manual here. If anything, I think that this might be the thing that pushes more automation, and so maybe that could be a bonus to the overall economy. This could be the impetus for making those sort of, and I think that's part of their argument is they want less automation. They want to make sure that they have their jobs guaranteed. So we'll see how that works out in the long run. But I don't, certainly that is it will have an impact short term. With regard to Israel, I think this is, almost a perverse thing. But if you go back and look at these charts that talk about global geopolitical events, wars, or other incursions and invasions, they typically tend to be buying opportunities and that's a morbid thing. That's it's a bit of a concern, and could it escalate? And certainly, we're seeing the impact, twofold impact on oil. We had China's stimulus, which was announced on Sunday. This trillions of dollars of stimulus. It's probably not the end of it, and more rate cutting that's happening globally, not just in Asia but throughout Europe as well. I think the argument is very positive on all of those fronts for the economic growth and the outlook. I mean, we just had all-time high yesterday on the S&P 500. So we pulled back. We're down. It feels like we're down more. I guess we were down like almost 1.5%. Now we're down 0.68%. But I think overall, there's nothing is changing my personal fundamental outlook. And just typically the fourth year president years tend to be very strong. The last quarter tends to be, when the first half of the year is up, the last quarter tends to be very strong as well. I'll take heat or whatever for what we talked about, September typically being a rough, the last 2 weeks typically being rough, and we definitely didn't see that happen. It was a very strong last 2 weeks of the month, which is a bit of a surprise because usually we do see some sector rotation, and I
Well,
thought that would happen.
it's the first bullish September that we have had since 2018.
Yeah.
So it's been 6 years since we had a bullish September. So,
Yeah, these seasonality things, they sometimes, when everybody everybody expects it, it goes the other way. So
well, and I think a lot of that, I mean, we talked about all the reasons last time we did a recording as to why it had the risk of doing that. And I believe that the reason why it did not happen this time is exactly what you had just mentioned, is that for the liquidity drain that was just part of a market functionality situation, it was offset by that excess liquidity that was pumped into the market by the quantitative stimulus that was coming out of China, as well as us cutting rates at the same time. So, yeah, we've had the best start to a presidential year ever in history. We've never had this strong of a bullish 9 months prior to an election. up 22% already year to date on the S&P. Now that's of course before today's little pullback that we've had. This was as of at the end of the quarter, but the interesting component, and I'm pulling off of some of the Howard Silverblatt's stats right now, is that it's broadened much more in the last quarter than it was the first half of the year. That's one of the nice things, is if you want to get more optimistic about this, is really an economy thing and not driven just by the Mag 7. But it's only broadened just a little bit. And the major component still, the number one contributing component of the S&P 500 is, of course, NVIDIA, which is up 145% year to date. That represents, of the 22% that the S&P is up, 5% of that, 4.8% of that is to NVIDIA. So almost over 20%, there's like 22% of the entire gain the S&P has had this year is the company that is driving the market right now, and that is NVIDIA. And so it's still their market to drive and control, and I think that still goes forward into the end of the year as well, as people continue to decide they want to invest in AI.
Yeah, you mentioned Howard Silverblatt. So Howard's with S&P Dow Jones, and he's an analyst who really dives deep into some of the fundamental stuff. And he's known for publishing this spreadsheet that a lot of people use. That's he takes all the S&P 500 earnings, trailing and forecasted earnings, future earnings, and rolls it up into a spreadsheet, which is it takes some time to sort of digest it and understand it, but there's some interesting fundamental stuff that's in there. And right now, Howard's we're pricing in a 15% earnings growth for next year, which um, seems a little rich to some people, but I think it can happen. I'm reading other reports, and that's in line with what's expected, at least from companies like Goldman Sachs.
Yeah, I think it can depend on what industry. I think, yeah, I still, and I think you're in the same camp with me on this. I have a hard time believing that Apple can fit that type of growth. I hope to be proven wrong. I'm an Apple fan. Um, but I think, there's several other names, the likes of Palantir, the likes of Microsoft, and of course, NVIDIA can continue to power those types of earnings. So maybe as an aggregate, 15% is achievable. Um, but um, but yeah, I think one of the things um, that I would want to point out is that I'm in agreement right now, and only in his views of the market, by the way, with the CEO of BlackRock, Larry Fink. Um, I say that because my politics differ greatly from Larry Fink's. But um, yeah, he was interviewed by Bloomberg earlier today, or maybe the interview was yesterday. There was an article published today on Bloomberg about his view on the market, and basically saying that he doesn't see a landing. He doesn't see a soft landing. He doesn't see a hard landing. He sees an economy still doing extremely well. Yes, there are some soft pockets in the economy that it seems like the media really wants to just focus on the soft spots. And maybe that is because they're trying to spin a political narrative one way or the other to try to help motivate voters right now in an election year. But I think that I see, as I step back and look at the economy, a fantastic job done by the Federal Reserve of threading the needle of what they had to do to try to bring inflation back into control and not increase unemployment, and keep us going. So I think I'm in agreement. I think the biggest risk the market still faces is not going to happen this year. It's what I started off talking about, is if we reignite inflation again, and that starts to come in next year, likely. But I don't see that happening between now and December.
Frankly, I'm surprised that the Fed, I mean, having had candid conversations with actual voting members of the Fed over the past couple of years, the concern about inflation and the reemergence of inflation, it seems now that the focus is on jobs. So this jobs report coming on Friday is going to be a big deal, to see where that's going, because inflation, it's interesting that if you ask people who should know a very simple question, which is what causes inflation, the answers, the number of answers you'll get. This is something I've taken up, is I try to play naive, and when I meet with you know current members, past members of the Fed, or chief economists, or other portfolio managers, money managers, people that, and I ask a simple question: is can you what do you think causes inflation? And that seems like a simple question, but there is no simple answer. And you get a mix of answers, and things that contribute are certainly, you mentioned earlier, energy prices, and wages is a big one right now. And wages are certainly strong. So I think that's, from an inflation standpoint, that would, I'm with Michelle Bowman. I would have gone a quarter point. I would have gone none, actually, if I was a voting member, and say, let's just wait and make sure that we're clear. I would let unemployment go up a little bit, but before because we never had a recession with unemployment under 6%, and so we're solidly in the low fours, so 4.3 or 4.4 right now on unemployment. I think we'll see what happens on Friday, but my fear still remains inflation, and maybe the Fed's confident that they can get it under control. But I think I told you that a former 10-year president of a very well-known Fed, that we were efficient in talk. And I think, I don't know if you were there, but you weren't part of this conversation. And
Was not.
I asked him the same basic question: what causes inflation? And he said, you know what, Eric? He said, I was a president for 10 years. I read every paper there is on inflation. And during that 10 years, we had zero, we had a ZERP interest rate, and we were trying to get inflation over 2%. Do people remember that? I'm old enough to remember when we were under 2% forever. And here we are with zero interest rate, free money, doesn't cost you anything, and all kinds of stimulus that's out there. And we couldn't get inflation to go above 2%. So what causes inflation is a good question. And you get a Fed president saying, I'm not really sure. And we're trying to make inflation go up, and it didn't go up. And now, can they bring it down? I get it that there's some things that are called, like hysteresis, which means it doesn't necessarily work in the one direction as it works in the other direction. So it's not an easy answer, and it's great for Monday morning quarterbacks to sit back and say what they would do. I don't think it's an easy situation, but what we can take away is that the Fed feels confident that inflation isn't a risk, and right now it's unemployment. That feels a little political to me, but because the Fed doesn't want to be seen as saying we don't care about jobs during an election year. And if they didn't cut rates, that's tantamount to what I think they'd be saying. So it is what it is. I mean, we're just going to trade it. The market's at all-time highs. I think we've got a long runway of things that can be bullish. You touched on one thing, and that's the election, which I think is really the catalyst that we all need to start pivoting and looking at. And there's a piece this morning from Citibank that I don't know if you had a chance to look at it yet,
I
but
have not.
I'll share it with you, and you'll figure it out pretty quick. So these are a couple different sets of data. So on the left, we have a chart that shows the day after the June debate, which was Biden's absolutely awful debate, and the Monday after the Trump assassination. So these dark blue and light blue bars are the different sectors and how they performed. This is stunning, if you ask me. If you look and you can say yes, we've got, this is just one data set. The other data set is the Harris Trump, which undeniably, Kamala Harris won that debate. And it's what's striking to me. You've got your playbook, folks. You might want to pause the screen right here and take a screenshot of this. You have now, nobody knows the answer, who's going to win. But as far as, I think part of the approach here from a trader's sentiment is, these might be clean energy, infotech. Just look at the response, how opposite they are. Maybe healthcare, real estate, these things that are in the middle, not so bad. But I mean, if you're betting one way or the, I think maybe hedging yourself, putting yourself in a collar trade over earnings and see what happens. If the stock crashes or goes up, if because right now it's according to the stats that are out there. Of course, I don't know who they're polling. I get phone calls and text messages. We need your opinion. Like delete, block. They're
Yeah.
not getting my opinion here, and nobody. I'm telling you that my opinion is not reflected in any polls that I read. So I'll tell you that. But I think this is pretty stunning. I wanted to get your reactions and thoughts to these sectors and this response. What do you think?
Well, the obvious one there is clean energy, right? You know, you've got that's the biggest disparity on and that's just as which general political leaning is and how they're going to treat clean energy. Um, I, I find it interesting that the energy sector is one of those ones that I don't think is getting enough. And this goes right down your alley too. If we're really going to be building as many data centers as needed to make artificial intelligence everything, we're not generating enough power right now. And I see that we're all of a sudden a lot of these nuke plants that had been scrapped are now back in the process of being opened back up again
Yeah, another one in Michigan yesterday. So you got Three
because they're
Mile Island is coming back. By the
needing.
way, that's not the 3 Mile Island. That was 3 Mile Island Unit 2, which and then 3 Mile Island Unit 1 is completely different. Oh, it's much safer unit. Probably the safest plant in the US.
Sorry, that was a little side thing that came off on just talking about clean energy, but
But
obviously
that's utilities, not energy, by the energy is
right.
oil.
Yeah, that's true.
Yeah.
So yeah, energy versus clean energy. That's utilities, exactly right. So the other big one, obviously, I look at regional banks. You know, there's much more bullish move when it would look like Trump was going to
Right?
win versus, you know, all of a sudden it looked like Kamala may pull in the lead. The
Yeah.
regional banks had a huge difference. Um, I think there's some trades there for sure that you could look at.
So look at all the international. So global equities, China, Europe, Latin America, all of those sectors. Obviously, there's the thought about tariffs. I mean, I think of the clean energy and anybody who's trading end phase or first solar. I think if you're trading stocks, you need to be looking at your stock every day. And this is what I do, anyways. I sort my watch list by percent change. I look at the top and the bottom. I look where the S&P 500 is. Try to explain why is this one where it is. And so certainly anybody who's trading end phase or first solar knows that however the political winds blew in the past 24 hours is how your stock traded. So if we get a strong some strong comments on the Democratic side, it looks, clean energy seems to do well. First Solar is a particular good name to consider because their panels are made in the U.S. So actually, I'm surprised that maybe First Solar would do well under Trump because any tariffs would actually benefit First Solar because they're United States. So.
Yeah, that's very possible, a very real possibility. Because I don't think it's that Trump is anti clean energy. I think it's more that he's just very pro made in the USA, and it will be a big disruption for global uh, supply chains. And that's the other big thing there that, as you already pointed out, is the bullish move in global equities versus just US equities. We will see how things play out over the next 30 to 90 days. I don't think either party has policies that they're talking about right now that are going to be deflationary in any way, shape, or form. I think both of their policies from both Vice President Harris as well as former President Trump are both inflationary to the economy if they actually follow through on them. Now, again, I say that because we can trust politicians, right, to do what they say they're going to do while they're trying to get elected. Um, you know, if everybody gets $25,000 to go buy their first home, guess what that's going to do to housing prices,
Oh,
which is the stickiest, most impactful part of the inflation equation we've talked about quite a bit. So,
housing prices goes up 25,000. It's kind of scary. How
So
little
we'll
people
see.
understand.
I know the next 30 days for sure, as we get through the election, will continue to be volatile. Remember, you've heard us both say it before, volatility isn't just down. You can have volatility going up also. And I expect we'll probably have more of that over the next 30 to 60 days as we digest the election.
Yeah,
Okay,
I'll throw out
one
one other
more.
thing. Last week we saw the VIX spiking when the market was strong, and it seemed an abnormal response. So something was on the horizon. Something was sort of spooking the market. I don't know that it's 100% clear what that was. And you, as you mentioned, volatility goes in both direction. If people buy a lot of calls on the SPX, that will cause the VIX to go up as well. But my belief is that a big portion of it is probably due to the election, because if we looked at the futures, the VIX futures, they spiked quite significantly, and they are still up. So I think a lot of this is, there's a lot of uncertainty all the way around. The election is certainly putting a lot in it. But to go back full circle to the beginning question here, all of these things are not fundamental changes to our economy. Although whoever becomes the next president, I think overall the market is going to go up for both candidates. Probably what matters more is if we have a sweep with all one party. But if we have a mixed Congress, I don't think the Republican or Democrat president really makes a big difference, other than there'll be puts and takes, as we showed on that chart.
Yep.
Maybe banks do better, or maybe international companies do poorly, or electric or clean energy companies, your solar renewables, that will play out differently. So there's going to be puts and takes, but overall, I'm still bullish into next year, even after the election.
Okay, one more thing before we wrap up.
Like and subscribe.
It's the first day of the best postseason in all of sports. So who do you have in the World Series? Your two teams, American League, National League, and who's going to win it?
I'll go with your Dodgers.
Okay. Going with the
Dodgers and Brewers. How's that?
Dodgers. No, they can't make it to the World Series. Brewers are,
Oh,
are
That's right. Brewers are American League now.
yeah, they're.
I don't know.
You got the Tigers are the 6 seed, the Royals the 5 seed, the Orioles the 4, the Astros are the 3 seed, the Indians, the Guardians are the 2 seed, and the Yankees are the 1 seed in AL.
Yankees.
Yankees. Okay, we're in agreement on this. I am picking the Dodgers over the Yankees in the World Series. I want to see a home run derby between Ohtani and Judge in the World
And
Series.
how about a moment of silence for Pete Rose?
Oh yeah, sad day for baseball.
And your other favorite basketball player? No, no, no.
Oh yeah, Dikembe died this week too. Bad, yeah, bad week for.
Yeah. And then there was some singer who's the famous singer who passed away.
Yeah, I saw the headline.
Chris Christopherson. So
Yeah.
there's our 3. We're done. Comes in
Okay.
threes, right?
All right. Thanks everybody for joining us and listening to our opinions on baseball. They do matter. That I can give you advice for. I don't give you investment advice, but I'll give you advice in this pro sports arena. All right. Thanks,
Greg.
Eric. Good to
see
talk to you
man.
again.
We'll
We'll do
talk
it
to you
again later.
See ya.